All right, welcome everybody. We're going to get started here. All right, so today we're going to talk about the 7A and the 504 loan programs. The SBA is not making the loans, they're guaranteeing a portion of the loan. So SBA is a very powerful financing tool. It's actually, I think, the most powerful tool. Banks, credit unions, and non-bank SBA lenders make these loans, and a portion is guaranteed by the federal government. And so these banks will make loans that are a little bit more aggressive. So what does that mean? Higher leverage. You can go and do a franchise startup with no operating history and get up to 90% of the total project cost financed. Generally on these 7A loans, unless there's real estate involved in it, it's going to be a 10-year term based on Wall Street Journal prime rate, which today is at 7.5% plus a margin. And it's usually a quarterly adjustment. So it adjusts with Wall Street Journal Prime. Now, that being said, some banks offer fixed rate options. And if there is a real estate component, we can sometimes amortize these loans over 25 years. So on the 7A loan right now, the max amount, you can have a total aggregate of $5 million. So you can have multiple loans up to $5 million. That hasn't changed since 2010. We have a new administrator coming in to SBA. So I believe that they're going to change that. It's going to be probably 7.5 or 10 million, which is going to open up a lot of Main Street businesses because there's a lot of business acquisitions going on right now. So that'd be a very good thing. So you can, what can you use the 7A for? You can use it to buy real estate, not investment properties, but real estate where it's an active business, hospitality, hotels, inns, bed and breakfast, self-storage. Okay, not like multifamily where it's more of a passive investment, but an actual active business. When it's an active business, as long as it's an eligible use, that is possible. You can also use it to either the 7A or 504. Let's say you own a business right now, you can go buy a building. As long as you occupy 51% with your business, you can use SBA financing. So it's a very amazing tool. Amortization is between 10 and 25 years. It's going to be 10 when it's just a business related with no real estate. And then it can be amortized as long as 25 if there's real estate. And then once again, generally the 7A is tied to Wall Street Journal Prime plus a margin. The 504 is actually two loans, and you're going to use the 504 strictly. The 7A is like the jack of all trades. The 504 is really geared for real estate, self-storage, things like that. It's actually two loans. Let's just break down $1 million deal. It would be a $500,000 conventional bank loan, and then there would be up to 40%, which is the SBA guaranteed piece. So it's a first and second. Usually the bank funds the first and second. And then after certificate of occupancy or after you close on the transaction, what happens is there's a debenture and that guaranteed piece gets bought in from the bank. So the reason you would use a 504 is because the SBA guaranteed piece, once the debenture happens, is actually fixed rate for 25 years. Currently, it's trending around 6.5. The senior piece is negotiated at bank level. The advantage of this product, if you're buying a hotel or something like that, we could do deals north of $20 million with this type of financing. Now, this is geared just for real estate type of businesses, self-storage, hotels, that kind of thing. Or if you were doing a rent replacement deal where you're moving your business from a leased location to an actual building that you own, you can do construction loans with the 504 as well as the 7A. You can also do some heavy equipment finance through the 504. So there's some pros and cons. It's got usually a better interest rate, but you also have a longer prepayment penalty. On this asset, you're going to have a 10-year declining prepay. So this is really just for fixed assets, real estate, and equipment. Business acquisition can use the 7A or the 504. If there's real estate, you can use the 504. This allows for goodwill, equipment, working capital. This requires a 10% equity injection. So franchise financing. So Dan's company, right? There's a handful of banks that are really good at franchise startups. And you can finance between 70 to 90% of the total startup costs. That includes working capital, the franchise fee, equipment needed, etc. So it's a really nice program because you don't even have historical financials, and they're basing their loan on your projections, essentially. And so there's some caveats to franchise financing, but generally, a lot of people think, oh, SBA, I've heard it takes forever. It's actually a really quick process. With our small SBA loans up to 150, we're able to get deals done in 2 to 3 weeks. The bigger deals usually take 45 to 60 days. And then the real estate deals may take a little bit longer. A lot of that has to do with the borrower getting the paperwork in a timely manner. Business expansion loans. You got so if you have an existing business, let's just say I own an HVAC business and I've owned it for 2 or 3 years, and my competitor down the street wants to sell his business, and it's an HVAC, it's in the same NAICS code, which is it's a classification, same business. I can actually do 100% financing and do what we call a roll-up. You can also do 100% on an expansion. So as you can see, you can really utilize your $5 million aggregate of SBA financing into multiple loans and even multiple businesses. But for expansion purposes, it's considered expansion when it's the same industry, the same sector, the same ownership structure, buying additional territory or expanding, essentially, right? You can't do 100% expansion if you are an HVAC company and now you're buying a painting company. It's different NAICS code, so it wouldn't classify. But being able to get 100% financing is amazing. So I'm a CPA. I rent my space for the last 10 years. I can go get 100% financing to go buy a building, furnish the building, and get working capital and get it all financed through an SBA 7(a) program. Pretty amazing. So 100% financing possibilities. So a business acquisition, let's just say it's a $1 million acquisition of an e-commerce business. I'm just making this up. A bank or credit union or non-bank SBA lender can finance up to 90%. So the bank makes a $900,000 loan and you got to come in with 10%, 100 grand. Well, that 10%, part of that can be financed through the seller. It's called a seller carrier, seller note on full standby, and they can carry up to 7.5%. So if you structure a deal right, I can go buy $1 million business that's got strong financials for 25 grand out of pocket. Now you got to have good credit. You got to have outside income that supports outside debt, but you can basically go from corporate to doing a business acquisition that has cash flow, and you can close on it for as little as 25 grand. Now everything has to make sense. Now, how does the SBA underwrite? They use what's called a debt service coverage. So we spread the financials of the business you're buying on a business acquisition, existing business. And we average them essentially, and then we make sure the cash flow can support the new SBA loan. It's called debt service. It's got a debt service greater than 1%, 1.15. Generally, you want a debt service 1.25 or better. But that is an amazing thing. The other thing you can do is, let's say the seller doesn't want to do any financing. You can bring an investor partner that owns equity in your new business entity that's buying this new venture, and they can own less than 19%, and they don't need to be a guarantor. So there's a lot of caveats, a lot of cool things that can be done with SBA financing. Now, if there's a collateral shortfall, so anytime there's no real estate involved, there's a collateral shortfall. If loan amounts are over 500,000, we have to look for additional collateral. So just keep that in mind. If you own real estate or anything like that, and I'm making you $1 million loan and there's no real estate in that business acquisition, and you own a primary residence, unless you're in a state like Texas where they have Texas equity law, they would have the SBA guidelines would require a lien to be put on that real estate. Now, if you don't own real estate, doesn't mean we can't get the loan. It's almost like you're a little bit hindered if you got a lot of equity and you're borrowing more than 500,000. So just keep that in your mind. Some people may have equity lines on their houses and things before they apply for the SBA loan, so they can take their equity and use that somewhere else. So here's the case study in writing. $1 million purchase price, 900,000 SBA loan. And then the seller is carrying 7.5% back of that 10% needed for that equity injection. That's 75 grand. That either has to be interest only payments or no payments. It can accrue interest for at least 2 years. The buyer comes in with 2.5%, which in theory could be an investor partner or it could be a gift. But essentially, banks use what's called prudent lending. They're not going to make a loan that doesn't make sense. Like if you don't have an established credit history, you don't have a good a good work history. Although you can structure deals like this, you have to have those compensating factors to make these deals work. And that's what we do. Part of what we do is we help you find the right lenders, because you can take the same deal to bank one and they say no, bank two says no, bank three and four both would love to do the deal. So by navigating to the right bank is the key of this. Partner owns 19%, right? So we needed to, on the $1 million acquisition, we needed 100 grand. Let's say you negotiated with a partner, friend of yours says, yeah, I'll put up the $100,000 in return for 19% ownership. If he stays under 20%, he doesn't have to guarantee the loan. So a lot of times now he has 19% ownership. It can't be a loan from that partner. It's actually, he's got to be, or she has to be, an equity owner of the business. We've done that ourselves, where we bought into a business and the main person owned 51%, and then there was three investors. Investor one, my wife. Investor two, my friend, and investor three was the brother of the main guarantor. So you're able to do that. So perfect. Like I'm saying, SBA is very flexible. You can do a lot of things with SBA. Key benefits of SBA financing: lower equity injection versus conventional loans, longer repayment terms, which reduces your monthly debt service, ability to finance goodwill, which is basically error, right? There's no collateral behind it, and working capital. Common SBA loan requirements: strong credit. We need 680 credit score generally or better. Business financials and projections, industry experience or relevant background. That's not too critical, but I can show you how to paint the right picture on your resume. I got a friend called ChatGPT, and it's really good at creating resumes. So how does it work? Well, it depends if you're doing a franchise startup or a business acquisition or just a startup non-franchise. But essentially, it all starts with an initial meeting. What are your goals? What are you looking to do? Usually in about 10 or 15 minutes, we can dissect it and get a game plan. Is this going to work or won't it work? And then we put together some documents, usually what I call a light package, and that gives me enough to go get a term sheet from a bank, credit union, or non-bank lender, depending on the situation. Now, there's also other loan programs like USDA. So if you're in more of a rural area where the population is less than 50,000, we have a product called USDA B&I. We can do up to $25 million loans with that. There's also state guarantee programs that are non-SBA. Generally, you have to have good credit. You have to be a U.S. citizen or a permanent resident, okay, of the U.S. to utilize SBA financing. Now, if there are state guarantee programs that don't require that you are a U.S. citizen, it's very challenging because not every state participates. But if it's in a state that does, you can sometimes navigate that. Or sometimes somebody that's a non-citizen partners with a permanent resident or a U.S. citizen to be able to structure SBA financing. Or they use some sort of alternative financing to do business acquisitions or franchises, which is available as well. Best practices for loan approval: solid business plan, some transferable or industry experience, and then getting the package to the right lender is the most important part, because not all lenders are created equal. Even though they underwrite off the SOP, they all overlay differently. Some of them don't like hospitality. Some of them don't like franchise startups. Some of them don't like business acquisitions that don't have collateral. So if you just come to our team, we help you navigate the whole process. And most of the time, there's no charge to you for that because we're paid by the bank. Sometimes there are for small microloans, but in general, on the 7A, we don't have to charge you a fee. So it's like getting a concierge to take you to make sure you get to the right place and the structure the deal. Structuring the deal is very important with SBA business acquisitions. Why work with a SBA loan expert? Just like I said, I already covered this. We're going to help you navigate the waters. It's the biggest thing with SBA, getting the right package to the right bank. This will ensure that a smooth closing, making sure your projections are on point. You got to make your projections on point, especially on a franchise startup. We help you on that whole process. Next steps, you can schedule a consultation with me. If you're looking for a business, you're going to take a quiz later. If you're just looking for financing, we'll put a resource so you can connect with me as well. Thank you so much. If you're looking to grow your business, I put together an ebook. It's all about utilizing virtual team members and AI together to 10x production. If you're looking to grow organically without having a massive team and massive overhead, this ebook's for you. It's free. You can go to bizscalingplaybook.com, get your copy. It's got all the tools I use, some prompts, and much, much more. It's an evergreen book. We'll continue to add to it. Get your copy now before it's too late. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.